On top of all of the devastating loss of life and property due to the California wildfires, there's also been a lot of concern and questions over how their massive insurance claims could potentially affect our insurance rates around the country. So I wanted to sit down with a longtime insurance agent, Gary Wild, who is with Farm Bureau, and get some of these questions answered and try to at least understand a little bit of what is going on with their insurance and how it can potentially impact the rest of the country going forward. You know, we've had a lot of damage in Florida, we've had a lot of damage in North Carolina, and it's all sort of related to each other when it comes to insurance, which can affect what we can purchase as homeowners. So I do want to preface this conversation by saying that our hearts and prayers go out to the families and victims of those in California. And I mean, it's unreal to watch. I can't imagine what they're going through. And so we wanted to bring a little education today, and I wanted to get some questions answered for my clients and anybody watching. If you're moving in to Tennessee or you're here in Tennessee already, this could definitely affect you. So welcome, Gary.
Yeah,
thank you for being here today.
My pleasure. Thank you for having me.
Yeah. This is going to be really an important video, I feel like. So let's just jump right in and talk about the insurance as a whole and how it really sort of all comes together. From my understanding, insurance is kind of like a pot. Everybody around the country pays into this pot. When there's a disaster somewhere, those funds come out of this pot. If the pot gets too low, kind of thing, that's when rates start going up. So I know every state has a different way they handle things. Can you kind of shed some light on the insurance industry and how that's, how they relate?
Absolutely. Sure. I don't mind at all. You're correct in a sense that it is kind of, we are all paying into a pool, if you will. And then those funds are obviously in accounts with insurance companies to grow interest, so that they have kind of that rainy day fund. So when those disasters happen, those catastrophic events happen, the insurance carriers are well suited to handle those type of things and make sure that they don't go bankrupt. The flip side of that is sometimes when the devastation is so catastrophic, such as these recent fires in LA, it can deplete those funds very rapidly. And so some carriers will spread that loss out over a nationwide. And so you may see someone in Wisconsin's home rates take a little bump to cover the devastation, say in California or Florida or whatever. It's just a way they kind of spread the risk out, and that's how they stay in business. And so you can see a lot of times when these disasters happen, it may be 6 months or a year later, but sometimes you'll see rates bump up a little bit, and it can be to offset some of those costs of that devastation. With Farm Bureau Insurance of Tennessee's set a little bit differently than that, because we only insure Tennesseans, and so we're very well equipped to handle catastrophic events. We have been very fortunate not to have any in the state of Tennessee for a while. And so therefore, we've not had to really pass the buck, so to say, off to our clients as much as other larger carriers have throughout a nation, because we only insure Tennesseans. And again, even with all the devastation from the tornadic activity we have and the wildfires in East Tennessee, we've been very well suited to handle those, where we've not had to raise our homeowners insurance rates as much as other carriers have.
Okay. Yeah. So we were having this conversation before we started the video here, and I didn't realize that's not a Tennessee thing. That's a Farm Bureau thing. And so so just to be clear, if someone's with Farm Bureau, their rates are not going to go up as fast or as often as potentially people that are with other carriers. Is that
correct? Yes. Yeah. Usually we don't take rate increases very often. As far as Farm Bureau Insurance of Tennessee goes, because we don't have those major payouts like some of these larger carriers do, because they're, again, insuring 48 states. We're insuring one state. Okay. So we're very fortunate. We're the largest insurer in the state of Tennessee because we only take care of Tennesseans, and we're very well equipped to handle any kind of catastrophic event.
Okay. So most people across the country, though, I mean, they're going to be with other carriers. California fires are creating an enormous amount of destruction, and these claims are going to be massive. So likely that most people are going to see their rates going up because of this, because of Florida hurricanes, because of North Carolina damage.
Yes, and the downfall of that is too, sometimes when those events happen, say within the state, for instance, just to use it because it's in the news now, but talk about the California fires that happened in the last few weeks. There are parts of California that may not have been affected by those fires, but those people's rates will be affected because of the devastation. And they may even go so far as to put exclusions on their policies that says that we're not going to cover certain things any longer if you're in a fire zone or something of that nature, or a mudslide zone that they're prone to in that part of the country. So a lot of things can change in the insurance world when these disasters happen, and it's to protect the insurance companies to make sure that their funds are still there to help people out whenever there is a real devastating event. It's unfortunate because people end up paying higher rates when they're not affected by it, and that's the biggest question. People say, "Well, I wasn't affected. I didn't have a claim. Why are my rates going up?" And I know that's unfortunate, but that is just the nature of the business. Again, it's just spreading the risk out. So.
Okay, so that leads perfectly into my second question, which is we're hearing a lot of Californians, they were getting dropped before the fires, like their insurance was dropping them. We've heard this in Florida for many years. And so then I've heard other people clarify that they're not really getting dropped, they're just not getting renewed. If that's the case, so what does that look like? Why are they getting dropped? I mean, I realize in Florida, like it's roof age, it's location. Is that kind of the same thing in California, or what went on there that so many of these people were losing their insurance?
It's tough to say exactly. Again, every state's a little different, and I certainly don't want to speak for what's going on, in the Department of Commerce and Insurance in California. But my assumption is probably just that. I think it's probably the fact that there are higher risk of devastation in certain areas of the state compared to others, and therefore I think that insurance companies are having to adapt to find ways to underwrite and decide whether or not they're going to cover certain people with certain risk to basically make sure that they're not exhausting all of their funds in a certain area. For instance, if Northern California is more prone to wildfires than Southern California, or vice versa, they're not, in the event that happens, they're not exhausting all of their catastrophic funds in one area and making the other area that never has it pay for them. And so what they do is they raise everybody's rates just across the board. It really is the most fair way to do that, and to make sure that the insurance companies don't go bankrupt, frankly.
Okay. So we're hearing that California had, I don't know, imposed some regulation or something that wouldn't allow the carriers to raise their rates. Is that kind of relate to what you just said?
That can't happen. I heard a little bit of that too. And again, I don't know the full details of it, but the Department of Commerce and Insurance kind of regulates insurance companies within a state. And so they can, insurance companies can petition to the Department of Commerce and Insurance certain things that they want to do, or guidelines they want to implement, or things of that nature. And I'm not sure what happened in California, but I do know that there was there were some changes done that did allow carriers to non-renew business, and I really think it was just a unfortunate timing event. I don't think it was anything they did deliberately, where they said, "Hey, we know something's coming. We're going to cancel these people, so we don't have to pay these claims." I think it was just a bad timing, where there were several thousand people, unfortunately, that were they just didn't have insurance any longer. They were non-renewed for one reason or another, and then the event happened, and unfortunately they are out without coverage.
Okay, yeah, it was something to the effect of they didn't like the way these areas were maintained as far as forest management and all of that, and they just felt like there was too much risk.
Sure.
I mean, I guess kind of like what we have dealt with in Florida over the years. before I
It
came
happens
here.
if you have an area that is prone to fire, or you mentioned Florida. Sometimes there's wind mitigation things they do in Florida as well to offset the risk of hurricanes. Um, when they find that there are certain areas that maybe are going to be more prone to fire due to, say, droughts, or they may have a forestry issue that's not under control, where they're not cutting back away from the homes or whatever. That obviously increases the risk of that home going up in flames in the event of a wildfire. And so insurance carriers, even in this state to an extent, if you have a tree that's growing over your roof line for some reason or another, insurance carriers can actually say, hey, we're going to non-renew your business if you don't remove this tree, because we see it as a potential hazard of falling on the house or whatever. Well, same thing out there. If they say, if you don't do this, we're going to cancel your insurance. And again, I don't know the whole stipulations, but my guess is they probably had some adjusters, and some people went into an area and look at them, and they say, well, in the event of a fire, we're going to have massive losses here. So we're going to ask these people to do some changes, or we're not going to be able to cover them any longer. And I'm assuming that's what happened in that scenario.
Got it. Okay. Okay. And so that leads to my next question is, if people in California or Florida have open claims, current claims on property that they own there, whether that house is still standing or not, are they going to be able to get insurance on another property here in Tennessee or in another state they move to? What does that
That's
look
a
like?
great question, and actually we see that a lot recently. Obviously, with all the stuff that's happened on the East and West Coast. Generally speaking, when there's an open claim on any property, one cannot get insured with someone else during that time. They want that claims process to be closed out and just taken care of before they will allow another policy to be written. There are some exceptions to that rule. I saw this before in certain circumstances where there were catastrophic wildfires and things of that nature, where people were forced to relocate to other states. There were some exceptions to the rule, but generally speaking, if you have a claim on a home currently that is not closed, you could not get insurance with another carrier. Again, there are some exceptions to the rule, but it's best to have that claim closed out prior to purchasing a new home and trying to get insurance with another carrier. And even then, depending on what caused that claim at the time, it could be difficult getting insured. It's a very volatile market right now in the insurance industry, and a lot of them a lot of carriers are nervous about insuring people that have any substantial claims history. Obviously, they want to lessen their risk as well, and so it's something that definitely need to take into consideration whenever you're buying a new home or relocating. Is whether you can get it insured at all based off your previous claims history. Again, if you're coming out of something like California or the flooding in Florida that's happened, that was just unavoidable. There was nothing they could do. Sometimes there are some exceptions to the rule that would allow them to be insured in other states if they, say, relocated to Tennessee or something of that nature.
Would that affect car insurance as well, or is it home insurance on home insurance? Because I know car rates, we were talking a little bit about, my car rate has gone up too with all this insurance. Insurance is insurance. So
right. It doesn't affect it as much on the auto side. For instance, if you had a home claim and you moved to Tennessee and you decided you wanted to bring your auto to an insurance carrier here while maybe you're renting a place looking for that one to buy, it wouldn't keep you from getting auto insurance in Tennessee. The only thing that would really affect your auto is your claims history on the auto side. But your house claims wouldn't affect your auto insurance.
So what if a lot of those cars were burned up? Mm-hmm. They have nothing left, literally nothing. So they're leaving, with obviously a claim on the car now, a claim on the house. They're coming over here trying to get a new car or going wherever or staying there and getting a new car. So, are they just not able to get insurance on the car either then?
No, they can get insurance on the car. The claims would usually be paid out under a comprehensive claim, which don't rate you like a collision claim would, where collision covers basically if it's your fault that causes that accident, or you swerved to miss that deer and hit embankment kind of say that's collision coverage. But if you were to have the animal collision, that's comprehensive. Well, again, your act of God or act of nature that would happen for your claims would be considered comprehensive. And so you would be able to get insured with other carriers in that case. As long as you haven't had a long list of claims over a 3-year period, you can pretty much get insured with just about any carrier in that scenario. So
Okay.
It should be okay.
Okay. Yeah, there is so much to know about insurance. It's not. Okay. So do you feel like people are going to, I mean, we're hearing, things, it's all over YouTube, it's all over the news, obviously. So I'm hearing some people say that they feel like Californians are going to get great big payouts on these insurance claims. Then potentially developers are going to come along and buy up the land from them. They're just going to have a windfall of money, which would be amazing for them. Is that realistic? Do you know anything?
I don't know. I kind of heard a little bit of that as well on some social media chatter. I'm not for sure if that's something that will happen. I don't put anything past anybody these days, so I would say anything's a possibility. But at the moment, I really can't speak of it. I don't know much about it.
Okay. Do you feel like a claim like that is, I mean, because other people are saying, well, I guess that was related to property tax, that the property value really was in the value of the property, whereas homeowners insurance were just insuring the structure.
Correct.
Or any structures on there. So do you feel like that's going to be, like people are going to be taken care of generally if they had insurance? I know in Florida, we fight with insurance for a long time after the hurricanes. Like it's not easy. When people, I think they say 20% of Florida now is uninsured or self-insured.
Wow. Yeah.
Because of that, it's like, it's so expensive. And then on top of it, when you do have a disaster, a hurricane come through, you're fighting with the insurance for months, even longer sometimes.
Yeah, that's a problem. Insurance carriers try the best that they can to make sure that they're always insured to value. Now, as you know, property values go up. It seems like since 2020, since the COVID era, as we call it, things have been up and down, tremendously. And so it's been hard for insurance carriers to make sure that they're insuring homes to value. Most of them do a good job of trying to look at them every few years and say, okay, well, I see this year your house has went up $100,000 in value. Are you adequately insured for that? But really, they just don't have the capability to do everybody. They try to get them all done in a timely manner, but when you're talking about hundreds of thousands of people, it's hard to go through and reevaluate every single property. That being said, some of those people will probably be underpaid when it comes to paying out claims on these. There may be homes that today the rebuild cost may be a couple $1 million to rebuild, whereas they may only be insured for a few $100,000. And so the insurance contracts will say they'll pay out whatever it was insured for. And so in that scenario, they may get a $500,000 check for a $2 million home and thus not have enough to rebuild. So it's always good to get with your insurance agent, no matter where you're at, and review your policies every few years. Farm Bureau, we do it every 4 years here as a courtesy, just to make sure that we follow up with our clients to double check those things and make sure that you're insured to value. The last thing you want, insurance is great, but in a catastrophic event, whenever you lose everything, one of the worst things you want to hear your insurance carrier say is that, well, here's your check, but it's not enough to build you a home back like you had. And that's a difficult conversation to have sometimes, but unfortunately it does happen.
Yeah, I'm sure. Like we've talked about that, again, being down in Florida for so many years, that was replacement costs. You go along and you think your insurance is fine, and then you realize, at some point. So I feel like the homeowner really should kind of stay on top of this.
Sure.
Hopefully you have a good agent, like you guys are staying on top of it every few years. But I had that happen personally, where she said, well, you've got coverage for this, but how much is it going to cost to rebuild your house if a hurricane wipes it out? And then when I started looking, I thought, wow, this thing it's way underinsured. And so that replacement cost really kind of falls to me. Personally, I would put that on myself to stay on top of that. Sure. And make sure that I don't know if you need to go out and get bids, but at least, make sure that your replacement cost, because that's huge. That was huge. Absolutely. Down in Florida. And so,
yeah, I think it's worth a conversation. And a lot of people don't think about that. And sometimes agents are at fault as well for not following up with their clients as well. But it's important that it's great to have a local agent. That's one thing that Farm Bureau prides ourselves on. Farm Bureau Tennessee does, is because we'll always have agents in the field. We'll have somebody in your neighborhood you can come and talk to, and literally bring in your concerns and say, you know what, I added a room to my house last year. How's that going to affect my insurance? My appraisal came in higher, but what's the actual rebuild cost? We may need to bump our coverage. So when things happen, you really do need to contact your insurance agent and make sure that you are insured adequately for any kind of upgrades you make to your house, and anything that's going to add value so that you can rebuild that home back like you have in the event of a total loss.
Mm-hmm. No, that's a great point. Like, as we're upgrading, and so many people are upgrading their homes now because they don't want to lose their rate and sell it and go buy at these higher rates. So a lot of people are keeping their homes. I think we're finding people are keeping homes now 12 years is the average. It was 7 not very long ago. So a lot of people are putting improvements into these homes, and you're just driving up the cost. So then if your insurance, your replacement cost doesn't equal the cost you have into it, or a cost to replace what you've done, is you're just out of luck.
Yeah,
like that money's down the tube. So
that's right.
Yeah, this is important information to know. So let's talk about Tennessee's cost here. So comparatively, we've got a lot of people moving to the area. I think we've got 18,000 Californians a year, 25,000 Floridians a year, and we'll likely see more now with what's going on in California. So I want to give people an idea of what their insurance costs coming out of these really expensive states to insure. What are they kind of looking at? And again, guys, realize, like, this is Farm Bureau. This isn't every insurer across. Again, Farm Bureau's rates are not going to get impacted like other carriers are. So what does that look like? A $500,000 to $1 million house. What are you? It's
tough to say. Of course, there's a lot of factors that go into quoting individual business, but overall, I would say that people coming from those states that have been impacted by these type of things, most of them that I write are pleasantly surprised at how cheap the rates are in Tennessee in general. Comparatively speaking, from California or Florida or some of these higher risk coastal places, even people from New Jersey and New York are the same way. When they move here to Tennessee, generally they're very, very pleased with the homeowners insurance rates in Tennessee in general. Now, most people are very pleased with Farm Bureau's rates because, again, we keep our rates down due to the fact that we don't have a big risk like other carriers do. But even if they used other carriers in Tennessee, usually we're cheaper across the board than, say, insuring someone in California. So moving here, I would definitely, if I'm looking at buying property from California to Tennessee, one of the big questions when I'm looking at something is, what's the insurance cost going to be on that? Again, a lot of factors play into that. Is it in a flood zone? Is it in a declining neighborhood, as we talked about? A lot of things factor into those, but overall, insurance rates will more than likely be cheaper here than they would be in those other states, like Tennessee, or like California and Florida.
Okay, that's part of why I moved here. So let's talk a little bit more about how you determine rates. So is it the age of the home, the replacement costs, the location? Is that kind of the majority of what you look at?
Yeah, that's a great question. All those things do factor in. They all do are important. The one thing that they look at is obviously the structural integrity of a home. So the age of a new home. A lot of times you'll get cheaper rates. People they'll say, well, my house was built, in 1975, and it's very solid. It's a good brick ranch style home, and it is. There's nothing wrong with that. But they'll want to know why someone's home who was built in 2024, even though it costs more to insure, is cheaper than say the older home that was built in the late 70s. And simply the reasoning for that is because the new home is built with modern materials. So you have updated plumbing, you have updated electrical. You just have a smaller risk of anything going wrong, such as busted pipes or electrical issues and things of that nature. And so insurance carriers usually will reward those people for buying new homes, if you will, and just because the odds of them having to put a new roof on something that was just recently shingled or have a water claim on new pipes is very rare. And so the rates for buying a new home, even though the overall cost of that house may be more expensive, the insurance rates could be much cheaper than buying, an older home.
Okay.
Not to shy anybody away from buying older homes; they're great, but that's just one reason that so many people I think are moving to Middle Tennessee is because we have a great abundance of new homes that are being built throughout all of Middle Tennessee. And people have a very, I still believe, affordable selection of homes that they can get here. And the insurance rates are relatively cheap on those new homes for that reason. So, would never shy anybody away from buying an older home. Just be sure that you have inspections done and make sure that it's up to par. Because again, if somebody has a roof that is maybe 20 years old on a home, most insurance carriers will look at those roofs and see what the structural integrity of that is and see if it's still valid. Some will exclude that roof if they see maybe shingles are missing or perhaps the roof is compromised in some way. They could exclude it until you put a new roof on there. Some will depreciate the roof out. So, for instance, if you have a 20-year shingle and you're 19 years into that 20-year shingle and you were to have a claim, they would simply depreciate out that because you were going to have to replace that roof anyways here in about a year. And a lot of times they'll pay 100% of the labor and then they'll just depreciate out the materials cost. But to your point, all those things factor into ratings. Another thing that factors in is fire ratings, perhaps how far you are from a fire hall or even fire hydrant. And then some people do what's called by peril ratings. And again, it goes to the amount of claims in an area based off of weather-related issues, such as tornadic activity, hailstorms, things of that nature. Those all can factor into the rating when it comes to buying a home.
Okay. Yeah, that makes sense. I mean, it's kind of similar in other states that I've lived in. So basically, we've covered the gist of it. I know it's a long video, guys. There's so much to know when it comes to insurance, no matter what state you're in. So, is there anything else we missed, or you think we should talk about?
No, I think you did a great job. You covered about everything. The biggest risk we have in Tennessee are usually wind damage and hail damage, and that's just par for the course. Again, we have a couple of storm seasons here, and they're short and usually not too terribly bad. So.
And otherwise, it's amazing. I really do love it here. So I'm very happy I made the move. But well, thank you, Gary, so much for doing this.
Pleasure.
I appreciate it. This is a ton of information and information people need. Like this is, whether versus calling your insurance guy and going through all this, now they can just watch the video. So,
Sure. No, my pleasure. Thank you for having me. Appreciate it.
Thank you. Okay, well, so if you guys have any questions for me or for Gary, both of our information is going to be linked below in the description section. So you can reach out to him if you're thinking about moving here, you already moved here, you just want to get a quote on your car or your house. And of course, give me a call if you have any questions about real estate, guys. Thanks for watching. We'll see you on the next one.